Welcome to Season 5 of SheVentures. I am your host, Doria Lavanino. SheVentures is a podcast about women and their work and life pivots. I believe in the power of storytelling. I also believe that if you change one woman's life, you start to change a family or a community. Our mission is to elevate the diverse stories of everyday women in their work. One promise, no mansplaining ever. Sit back, listen, and hit subscribe. We'd love to hear from you. You can find us at SheVenturespodcast.com. If you are intimidated by investing or feel your comfort level with growing your personal wealth is limited to the exposure you have through a blend of your mutual or index funds in your 401k or IRA, today's episode is for you. Why? We are speaking to a woman whose 2 decades as a finance exec were spent at companies such as Goldman Sachs, Deutsche Bank, and Instinet. Today, she is co-founder and CEO of fintech Rialto Markets, a FINRA broker-dealer platform that can help people like you and me invest in early-stage private companies while helping those companies raise capital. Today, we're going to explore how early-stage companies and everyday investors can be active in the private market, something that was not even possible until the Jobs Act passed in 2012. Here to tell us about her pivot from big banks to entrepreneurship and to explain how some women may want to explore investment in early stage companies or become one of those companies on her platform is Shari Noonan. Shari, welcome to SheVentures.
Thank you so much for having me. Really appreciate it.
It's great to have you here, and it was really exciting to research everything that you have done with your team. I've always liked to start with not the beginning per se, but your career started and your education even was in finance and international relations. What drew you to those fields?
It's really interesting. So I always thought I would be working overseas by this point in my career. I was really drawn to working overseas and living overseas when I was in high school and college. And I was really fortunate to attend Marquette University, who sort of allowed me to construct my own major and minor really before that was a thing. They enabled me. I went to Turkey when I was a freshman. I went to France when I was a sophomore and Poland when I was a senior, and then lived in Budapest after that. So that really provided a stage for throwing myself into really completely new situations, having to improvise and learn on your feet. I'm forever grateful to Marquette for allowing me to do those really interesting and off the beaten path type of experiences. And that experiential learning. It was really a combination of my university that I attended and my family, frankly. I mean, my family never said, you can't go to Turkey. Why are you in Poland and now living in Budapest? They probably said that, but they always supported me. When I graduated, I wanted to spend some time in a large city after graduation, and that's what brought me to New York. I didn't know anybody in New York City, but I got a job at a big 4 accounting firm and started in accounting. And again, just said yes to all of the opportunities which landed me at Instinet in electronic trading.
So numbers were always kind of a thing for you in addition to exploring other countries.
That's right. I always was fascinated, and I always felt, accounting was one of those disciplines where you can really offload a lot of the other things to experts. But accounting, it's always best for you to know the accounting and the books and be able to understand and read a financial statement.
That is so, so true. My mom is 88 years old, but she was a CPA and now retired, and she loved it. But to your point, when I sometimes hear people discussing balance sheets, I don't know all the terms, and I do feel a bit lost. And so I think that education is so invaluable. You spent 2 decades in a field that also has gone under rapid innovation, I think mostly because of technology, maybe other factors. What would you say is the most significant transformation?
Well, of course, I'm biased. So I spent 20 years really working on the infrastructure for electronic trading. So to move U.S. markets from voice to electronic. And when I first started, that wasn't a foregone conclusion. It was, the 90s, and the big exchanges really were having concerns around that movement. And of course, the big banks, the incumbents, really didn't want that movement either. But the market structure and certainly technology changed that. So I was so fortunate to work at a company called Instanet, which was one of the first electronic communications networks that sort of is like a mini exchange, right in the middle of all of this massive change. And it was an extraordinary experience because you could tell that what you were doing was really impactful. But, some days it was pushing a boulder up a hill, and very few other days you were doing a victory lap and realizing you really had made a difference. But the reason I was so drawn to electronic trading is because of the shift in the markets that it had. It really allowed for scale. I mean, ETFs, and just brought that cost of trading down to a degree that is free now. I mean, it's not free, but the consumer, it's free, and the spreads have compressed so much. So I do feel like that was a real benefit to everyone. That's, I think, one of the most significant changes, as well as just the shift in terms of who's participating in the stock market. 30 years ago, not everyone really was a participant. And now today, there are a lot more people that are taking their financial future and taking control of that and understanding that. It can be scary. It can be really scary, but people are learning, and there are so many more tools and so many more applications and programs out there for people.
Absolutely. I had a number of thoughts as I was listening to you. First, I was thinking about how in movies, and I don't know if this is actually true, but they would show on the trading floor how, they would be like holding papers and I don't know if that's actually how things were traded at some point in history. Is it?
Absolutely. And, they had runners. That's why a lot of people were down on Wall Street, because runners would run from the stock exchange to the the brokerage company and run the papers back and forth, which is just crazy, right? If you think about it. So you think about all of those papers. It was around, I don't know, the 80s or 90s that things just became too big. It was too much in terms of that electronification. So things shifted from there. But it's been a really interesting evolution. And I actually met a runner when I was traveling out in Boulder, and he came up to me after the speech and he said, "I used to be a runner, my first job."
Oh, wow.
Which is amazing, but that's how it really worked. And when I was actually a swaps trader, and when I was first a swaps on the desk, a sales trader, we still had paper tickets. This is, 2005, 2006, and they were eliminating the paper tickets. But we still had a clock, and some people would stamp the paper tickets, and then within a year or two, it was gone. But it really lasted that long.
A long time. The other thing that I remembered was my father was active in the market, and he was self-taught before there was CNBC and everything. There are so many more tools, to your point. But I remember we're flying back from Italy, and it was 1986 or 1987. I can't quite remember, but it was a day when the stock market fell precipitously. What I remember is that there was no real time. It was like you waited till the next day if you weren't in the field to find out what the stocks did. You actually had to go to the back of the Wall Street Journal and look.
Isn't it incredible? So my first job was working for a mutual fund company in college, Strong Capital Management, and I worked midnight to 8. I would go in at midnight. I would price all the Asian portfolios, and then I would actually, this is 92, I would run off the portfolios on those huge printers with the stripes across it, and I would carry the paper to all the portfolio managers' desks between 4, 5, 6, 7 in the morning. and drop it off. So when they came in, they'd have a stack of papers and they would flip through and see the performance of their portfolios the day before, which is just crazy. Not to mention the fact that I couldn't wear pants. I had to wear a suit midnight to 8, to wear stockings, which was a whole nother topic of conversation.
Totally, yeah, but I do remember that as well. Like all of a sudden one day I realized no one wears tights anymore. Like, okay. Um, so finance and executive level positions overall are heavily male dominated. From your perspective, I wanted to ask it from two perspectives. I wanted to ask it from the perspective of an executive at a bank. You've been there. Why you think so few women had a seat at the table. And then I'd like to ask the question from the perspective of what can women do today to improve their chances of getting a seat at the table?
I was actually heavily involved in a lot of the women's groups at the big, large banks that I worked at. And, we talked about this quite a lot. And, it'd often be seen as a pipeline problem. And I put that in quotes. But it was, the classes coming in would be 50-50. And then towards women into their 20s, beginning of their 30s, people start dropping off. And then, more drop off. It's very difficult to juggle, at least back then and even now today, to juggle everything, life, career, everything. And the advice I would always give women is, one, take your entire maternity leave.
Yes.
Some women would come back early and I would say, no, take your entire maternity leave. 2, really having advocates that you can lean on within the organization that aren't necessarily competing with you. And I hate to say that, but in the beginning, there were a lot of women that were in the same cohort, but they would see themselves as in a competition for that one spot for MD or those 2 spots for MD because it was more of a quota. I'm probably using the wrong word and I apologize, but it was.
I know. I'm always terrified. Like, am I using it? That's what it was at the time.
Exactly. And so unfortunately, the dynamic that would happen is that women who should be banding together actually felt that they were in competition. And it created some not great dynamics. I do think that is now shifted because there are a lot more women that now are at senior levels. There are a lot more women coming through the pipeline. There's a lot more support around taking your full maternity leave. I do think there are certain segments, specifically sales. I spoke to a lot of women, a lot of young women in sales who were getting ready to go on maternity leave, and they were terrified because their client list would be covered by someone else for the time they were out, and they were nervous they would never be able to take that client list back. A lot of conversations like, don't answer your phone during your maternity leave. You don't know what kind of state of mind you're going to be in. Don't go to see clients on your maternity leave. Just take those 4 months and sort it out after that. And, I was really fortunate that I had a lot of support. I had a lot of mentors as I was coming up and a lot of support from some key people who helped me navigate. Of course, I had my 2 children in 2007 and 2008. It's like the world was ending.
That's in very quick succession.
Yeah, so that was an interesting timing personally for me. But I did have senior level support during that period, which was crucial for my own purposes. So that's kind of from the executive perspective. I do think companies are getting better and realizing that they need to put these programs in place, that they need to understand how to retain women and keep the talent in-house. I apologize, your second question.
My second question was, what can women themselves do? Because I think there's often this feeling of, I want to do what I can myself, and I'm willing to do whatever it takes. Well, within reason. So what are those things that you've seen that you think either you yourself could have done better or just generally could be done differently, better, however you want to phrase it?
Yeah, I think finding an advocate to help you, whether that's in the firm or not in the firm, especially at some of the more competitive firms that I worked at. One piece of feedback I got after I'd had my children and I was speaking to younger women who were getting ready to go on maternity leave, a comment that I'll never forget is a few of them said, no one's ever been honest with me about how hard this is going to be. Everyone sort of comes back and puts on their game face and says, this is great, I'm back, because it's a very Lord of the Flies type situation, right? And so just realizing and being honest with how difficult it's going to be when you come back and trying to build some support for yourself, whether that's at home, whether it's having, family members or others help you and kind of get through it, whether it's bringing in help, to not try and do it all yourself, because it's a 24-hour job and it's a really easy way for you to not be thriving.
Absolutely. I see that happening a lot. And I mean, there are, I think, other issues with this is broader, but the United States being one of the few that has no paid maternity leave. There are just a lot of considerations and it's both, I see it now both with women and men. When I was having my children in 2004 and 2007, I took most of my maternity leave. I didn't take all of it and I regret it, but I felt ready to get back. And my husband took 1 week. That was it. And now more companies have paternity leave or family leave policies. So that is something, but the fact that it's unpaid is still really hard. I mean, I know the whole short-term disability piece, et cetera, but it's just not easy.
It's challenging. And I also think, when you're in it, when you're on the ground, sometimes it's so easy to lose sight. I mean, I remember everyone telling me, you sleep when the baby sleeps. And I was like, oh, I'll just do the dishes. I'll just do this.
Exactly.
I'll do that. And then before you know it, the baby's up again and you don't sleep for 24 hours. So understanding that be kind to yourself, give yourself that ability to say, I see I'm not really in a good space right now. My body just went through a lot.
Yeah.
And so, to be kind to yourself and to realize that it's going to be challenging when you go back, and whether you're honest about that or not, because a lot of women I saw, it was sort of, I'm great, I'm back, but it was more a defense mechanism because they didn't want to show weakness. But it's not weakness, it's just being human. It's a human condition.
Absolutely. I think what you're saying is kind of so primal, and it is very Lord of the Flies. It's like, show no weakness so that I can't be hurt. And yet it doesn't really solve anything for anyone.
And I hope as a collective, as all of us together, that corporations and employers are beyond that and do understand that. I went back 8 weeks after my second son was born, and I just couldn't imagine how anyone could go back at 6 weeks. I was barely holding it together at 8 weeks. I really think that I know it's challenging for employers, but I also think there's a responsibility that employers have to be able to keep their, employees safe and not in a bad, not put them in a bad situation.
I've always thought, I mean, I've never done the math, but it just seems to me that rather than have churn or unproductive employees, why not make the investment in, say, paid maternity leave or other kinds of support that are going to make women happier when they come back, which makes them more productive? I mean, even if I'm just looking at it really from a very capitalistic perspective, it's still beneficial, I think.
It's absolutely beneficial. And I think, what that allows, sort of that time, what that allows is for your company to come back in a completely different state of mind and also more loyal to the company.
Yes.
Frankly.
So how did you spent 2 decades in really large banks doing executive level work, as you said, the electronification of the markets you were involved with. So how did you go from there to decide that you wanted to try entrepreneurship? How did that pivot happen?
Yeah, it was really interesting. It actually took about 8 years. So it was a long time in the making. It wasn't sort of like I woke up and said, I'm leaving. I spent a lot of time, and it was actually my husband and I, we started the company together. So that was also an interesting dynamic. But it was probably over 8 years, I realized that I was raising in the ranks. I was becoming a managing director. I had the nice office. But in terms of impact, my day-to-day impact was very small. And it was a lot more defense rather than offense. So it was very much becoming a job of herding cats, of kind of getting things aligned, of really being in a defensive position rather than thinking up new products, launching new products, changing the world, all of those good things. And there's always a time for that. But it was, because the markets were maturing, because the markets were matured, and there weren't any big things to kind of tackle. While I'm forever grateful for those experiences, after a while you figure, okay, I'm coming upon a time in my life where I need to either make a move or this is what I'm going to be doing for the next, 10, 20 years. We did spend, while it was 8 years sort of ruminating, it was really the last year to 2 years of planning and preparing and saying, this is what we want to do. This is really crystallizing, both from a business perspective, which is completely different now, by the way, which is completely different 7 years on. But, that discipline of going through and creating a business plan and really understanding the details and doing the analysis was beneficial and helped clarify exactly what we wanted to do. And then on the personal side, how are we actually going to do this? And especially because we both started the company. So it was 2 paychecks, not just 1 paycheck that stopped. In the beginning, it's great because you go into work, you kind of punch the clock, whatever, and you sort of do your daily work. And then you come home and at night, you're dreaming up these big dreams and you're doing, this big grand vision. And when you stop working, especially, having come from a senior position, in the beginning, it's very lonely. You're not going into an office. You're having a lot of coffee with a lot of people. It's a lot of coffee. It's a lot of, how do I do this? How do I do that? All of the things you didn't really think about. And then it's a lot of rejection. It's a lot of going in and people saying, that's the worst idea I've ever seen. Why would anyone want to do this? This is ridiculous. In the beginning, it took me about 2 or 3 months, and I would be sitting at my kitchen table. I'd be working all day long, and people from my old job would call me, or we'd email, or we'd text, and we'd go out to lunch. And finally, one day I said, you know what? I need to burn the boats because I'm still communicating too much with my old life. And it's holding me back. And it was a safety mechanism for me to say, well, I can always go back there if this doesn't work out. I can always, rejoin or get another job and that's why I was maintaining those relationships. It wasn't for anything else. Obviously it was nice. I was friends with them, but it was really because I wanted to keep that identity in the old world. And I remember sitting at my kitchen table and I said, I have to completely burn this old identity. It's hard to almost even think about now, 7 years on, but it was kind of like I felt like an imposter saying I'm an entrepreneur. Like, I worked at a big bank 2 weeks ago. How can I say I'm an entrepreneur? Like, I didn't really feel that. So I had to very consciously burn that whole identity and say, this is now the new identity. And it still took about 6 months to be very comfortable in those conversations, and 7 years comfortable having conversations with, big venture capital, private equity type firms because of that shift in who you are and how you identify.
You talked about it being a long process. Were you building the platform at the time? What were the pieces that you felt you had to have in place before you and your husband took the jump?
That was one of the challenges because I worked for a bank and I was going into another financial services. I really had to have a garden leave. I had to have a split. So we were very conscious of obviously that. I was a COO, so I knew all of the legalities around this. So it was more, what does the business look like? What does the marketing look like? More the business plan, not the platform or the technology or, certainly any of the licenses that we needed, because all of that had to be separated once, I'm somewhat unusual that it couldn't be a side hustle, right? It couldn't be something that I was doing at night in terms of building. I could think about it and I could, write things down in terms of let's look at this market or let's look at that, but I couldn't be actually building a company because it was in the same field as my company, which is different from a lot of people. They can sort of build a business at night. This was different in that respect.
Because you were COO, did you have to wait a certain amount of time?
I had a garden leave and I had to wait that out.
But that gave you time to really think things through. And then, so today we're at Rialto Markets, the name of your new platform, relatively new. I guess it's not that new. So, what are the problems, in layman's terms, what are the problems that you're trying to solve for and for whom?
When we built Rialto Markets, the reason we called it Rialto is because Rialto was the foot of the bridge where the first debt market started back in the 1500s. And we really wanted to anchor our name in something new around markets. And we really chose the private markets. So what we're really trying to solve is we saw a really interesting opportunity with private companies being able to, for the first time ever with the Jobs Act, raise money from the public, retail. And I can't tell you how many times I'll have a conversation with someone and they're like, you mean accredited investors? I'm like, no, retail, your actual community. That to me represented a fundamental shift in a huge market that most people don't talk about. And this market didn't have a lot of infrastructure. It had legal infrastructure. There's a lot of private equity funds. There's a lot of venture capital funds, but it didn't have technical infrastructure. So that's what we set out to build, because if we think about our DNA, the founders, are what all three of us really had a steep background in, was looking at a shifting capital markets, changing market. What did the market structure evolve and provide for? So what changes by the SEC resulted in an opportunity, and then how to really harness those changes and make it easier to scale, like get out to more people and make the cost lower, make it cost effective. So that's what we do for, issuers, for companies that are private. We allow them to raise money from their communities, anyone in their community, and do that in a cost effective way. That's really what we do for companies. For actual investors, we allow them to get access to these high growth companies. And if you think about, especially over the last 5 or 10 years, when companies go public, they aren't high growth anymore. When Amazon went public, it had been, around for 3 years. It still had this huge hockey stick. Microsoft, same thing. But when Uber went public, everyone had kind of wrung out all of the growth from it. It was sort of overdone in terms of the massive growth. And I don't think that's lost on people. I think people sort of realize that, now when you go public, the company is much more mature than it had been in the past. So we really want to, allow investors access to high growth companies and also different opportunities. So we work with marketplaces that fractionalize art and wine and cars. And so alternative assets, even music royalties, really alternative assets, so that it's not just, I'm investing in these 4 index funds, which are critical. You should invest in index funds and have that, but as a complement within your portfolio to begin to have some of these assets that are truly growth assets that really have never been available.
To your point, a few things that I want to mention. I believe it was before the Jobs Act, to be an accredited investor, you had to have $1 million in assets. Is that right? And so when the act passed, it basically said that other people could invest. And the other thing that I remember, I just have like little tangential understandings of the marketplace, is that like when Martha Stewart went public, for example, I remember that whoever the brokerage or bank firm that was involved in that really had an inside advantage. And that wasn't passed on to the public. Maybe it was to their like high net worth clients, and so it's really such an was an unlevel playing field to such a degree that it really was unfair. And that's why I love what you're doing.
I'll just dial into those. So in terms of the Jobs Act, what the Jobs Act really did is it allowed private individuals to invest, and it's within a framework. That's what I love. So, we do this in digital form, so blockchain-based securities. And that's what I love about sort of the regulated framework. Because if you think about other offerings that may not be regulated, you can put your whole life savings into it. No, with crowdfunding, Regulation CF and Regulation A, there's a framework saying you can only invest 10% of your annual income. You can only invest up to this amount. And if you're accredited, you can invest more, but it really allows retail investors to put some of their money into it, but not put their entire life savings into it, which is the whole framework that the SEC has worked so hard to create. and why I'm so passionate about some other new innovations coming into a regulated framework. That if we've seen FTX or if we've seen some of these other things that have gone on, one of the reasons that it was so harmful to individual investors is because it wasn't in that regulated framework.
That is so important. You're right. And when you say that, the first thing I think of is cryptocurrency. And I'm just going to leave that alone. I know some people are very into it, but it's very risky. So I want to just take a couple of examples of people, and then we could speak maybe to, or you could speak to how they might be able to harness your platform. So a woman who works 9 to 5, and let's assume that she's in a financial position where she's working full time. She already has her 3 to 6 months of emergency funds put away. She is saving for her retirement and has minimal student loan or credit card or mortgage debt. Like it's manageable. I don't know what the ratio is exactly. I'm not that into the numbers, but assuming she has extra money, and it's often said, I've heard this over and over again, and I don't know. I think that even studies contradict themselves. Are women more cautious with investing or not? I don't know. How could she use your platform to invest, and what are the potential risks and what are the potential rewards?
She could use our platform to invest in one of the 18 different issuers that we've got live right now. We onboard a new issuer about every 2 weeks. It's actually self-hosted. So the issuer, it's on the issuer's website, and we're sort of managing it on the back end. The benefit of that is that they're usually early stage companies. And so there's the potential for growth. The risk associated with that is they're very early stage companies. You really do need to only invest money that you can lose. Money that you would be comfortable if it went away. It's not going to put you in a bad position. If it goes up 10 times, fantastic. You got a, early present there, but not to invest money that you can't afford to lose, especially in these early stage companies. One interesting theme that we're finding is there are some later stage companies that are actually coming onto the platform. I think it's because this is becoming more popular as a way to engage communities, to engage whether it's ambassadors, brand ambassadors around the company, or anything else. So Substack has a crowdfunding that they're doing right now. They've got their own merits. I mean, I don't think they're profitable yet. We have a logistics company that's coming on. I think they're about 100 years old. So they're actually going to be launching soon. I can't mention who it is. They haven't filed their paperwork, but I found that was an interesting transformation in the marketplace where it wasn't just early stage companies. However, the bulk of the companies are early stage. And it's important to realize that. What we find is that most of the investors that invest in these, it's really because the company resonates with them. There's some sort of ESG component. Our most popular raises are either around electric vehicles, other agriculture, food, ag, tech, those types of things that people feel very passionate about. Space technology. There's a whole very, very large fan base around space technology, and they want to support the development of it. Those are really popular. But then you've got other things that are yield products that, are maybe real estate offerings that say we're going to provide yield or some sort of income fund. That's another popular type of, well, it wouldn't be a fund, but anyway, other types of investments that resonate quite a lot with the community.
That is fascinating. And I did not realize that later stage companies were coming on. Do you think, hypothetical, but do you think that they're coming on with an eye to go public?
I think they're coming on to either engage their fan base, so to either find another hook into, how do you increase engagement? How do you increase engagement with your community? How do you create more of a fan base? That's one reason. Another reason is they're availing themselves of a different way of raising capital. Over the last 6 months, it's been very challenging to raise capital. And so a lot of people are saying, let's look at all these different opportunities, and it may not be traditional, but I'm willing to try it out. Some companies do eventually go public. We did have one of our companies, they did 3 raises with us and then went on to NASDAQ. So that was fantastic. But companies need to really think about the impetus for why they're going public and what's behind that. we do see a trend in companies staying private a lot longer and just availing themselves of the private markets because they're so massive. But they're also very mysterious. So, it can sort of be really challenging to understand all of the different sources of funding and how you can access those sources of funding.
Is there a minimum investment? Could I invest $10? Could I have to invest 500?
Usually it's $50 or $100. Sometimes it's $500, but usually it's not more than $500.
If I want to sell my holding once I've bought it, is there ever a liquidity problem?
So that is one of the things we're hoping to solve with our alternative trading system. So we do have a secondary marketplace. The issuers need to sign up for that, but we're finding as companies are staying private longer, they're needing to give their investors and their employees, frankly, the ability to monetize those investments because it's trapped until there's an event. So what our ATS allows is for these issuers to really separate the company's exit plan, whether it gets bought or whether it goes on the public markets or whatever that exit event is, from the shareholders and exit event. And that's really critical as these companies decide, I'm going to stay private for as long as I need to.
Rialto does allow companies to do this at this point, or is it something for the future?
No, we do. So we have an alternative trading system. And it's issuer by issuer. Some issuers come on and they say, yes, I want to, a list or place on the ATS, and I'll do quarterly auctions. Some issuers come on and say, I will purchase the security if it goes below this level because it's a yield, and I'd rather have it in-house and I'll repurchase that security. So it just depends issuer by issuer, but we offer a lit market, meaning like the New York Stock Exchange where you can see all the bids and offers. And we also offer an auction where it's a point in time, everyone puts in their bids and offers, and then a price is found at a certain point in time.
That is very, very cool. I'm going to have to experience this myself. So the entrepreneur, there are a lot of women that come on the podcast. Some of them have been successful at raising venture capital. But we know the statistics, 2% of women are successful. Again, I don't think it's a pipeline issue, but either way, in women of color, it's even smaller. They have difficulty accessing capital for whatever the reason. How could they use your platform to raise capital? And what are the requirements, if any?
So first, I'll say that I am also in that boat of venture capital. It's extremely challenging. And when I was raising capital, I did everything wrong. I went after the wrong investor segments, the wrong time. So that was the one area of my business that was very challenging for me. I think it's important for any woman who's getting into becoming an entrepreneur to really understand the different segments of investors that there are and when they should be going after which type of investor. If there's if a woman has a business that has a community around it, and I mean whether it's a CPG company and there's a lot of people that are using the products that really love the product, whether it's people that are interested in the space, like space technology, or whether it's people that are interested in, it's a lifestyle brand and people are engaged around that lifestyle brand. That's really when utilizing our platform would be beneficial. And they would do it either two different ways, or actually three different ways, but the first two are the most common. Regulation CF, a company can raise up to $5 million over 12 months. We usually recommend Reg CF because for companies that are raising for the first time. And that's because it's cheaper, it's faster. You can understand if you're getting traction for less money and a shorter time period, a shorter time to market. You can sort of get up and running in, call it 2 months. Don't quote me, but, if you've got everything in order, around 2 months, and start raising capital. That is better than Regulation A, although with Regulation A, you can raise up to $75 million every 12 months. Because you can doesn't mean you will. And so you need to, that's, a lot of people sort of say, oh, I'm raising 75 million and that's great, but you really need to understand who your community is and how much traction you're going to get. So that costs more money and takes longer because you actually get qualified by the SEC like in an IPO. The SEC has to qualify that. Whereas a Reg CF, it's reviewed. It's filed and reviewed, but they don't need to be qualified. I would recommend if there's a woman that, has a community to check that out in terms of financing.
And it would really be a woman, and I kept hearing community, who obviously wants to scale. That would be the idea.
Absolutely. If you don't have a community, but when I say community, it's really because even if you go to a portal, when we work with a lot of portals and they're fantastic, our solution is what we call self-hosted, meaning we will promote it to our base of 300,000 people, but really we're relying on the company's base to make up the raise, right? And even if you go to a portal, unless you've got your own strong base, you're not going to get the traction you need to get that raise off the ground.
That makes perfect sense to me, having been there before.
Yeah.
Can any company go through this process, or are there companies that you will say, you know what, it's too early? Or
so we do work with usually seed and Series A stage, whatever that means these days, but where you could be pre-product depending on the industry you're in. I do find that CPG companies, electric vehicle companies obviously have very long cycles to get to market. They resonate though. And so you can not be sort of out in the market yet, but be far along in terms of the design and production and be able to do a crowdfunding raise. I think it's challenging with biotech companies because you've got the long process and FDA cycles, and a lot of retail investors can't get their heads around that. It's complex, right? The life cycle of that company. We've seen some medical technology companies that have resonated, if it's for a particular disease or something that people really rally around. But again, that can be a really long sales cycle. I would say, depending on your sector, what you're looking to do and the ability with which you can tell that story. So space tech is a perfect example. There are a lot of people, they like to tinker at night. They enjoy the conversations around space tech. That's a small community, but it's a powerful community. And if you can harness something like that and they can understand what you're doing, then that's a really good fit.
Yes, very sticky, and they understand it, keep coming back. Makes a lot of sense. What is the benefit of using Rialto instead of using a crowdfunding site?
There's really two main benefits. One is cost. So we're cheaper than the portals in general. So we're between 2 and 4%. We're success-based, meaning there's a small upfront fee to integrate, but then the majority of the fee comes from funds that are raised by the company. We will take 2 to 4% of those funds raised. Portals can range anywhere from 6% to 12% in terms of how much they charge. So that's the first difference. The second difference is when you're doing a crowdfunding raise, one of the major expenses is marketing. The beauty of that marketing is you're gaining awareness of both the company as well as bringing people to the site to raise money. So it's kind of, you get a twofer, but it can get expensive. Now, when you're using our site, when you're using our service, all of that flow, all of those marketing dollars can be tracked digitally. A lot of work has been done on digital marketing. So all of those dollars can be tracked digitally. If someone's clicking a button or someone's clicking a link, those links send the investors back to the issuer's page. If you're using a crowdfunding portal, it goes to the portal. So you're spending money on marketing, but you're losing sort of what the funnel looks like. You're losing that shape of the funnel. It's all getting diverted to the portal. So that's really a big reason why people use self-hosted rather than going through a portal.
Yeah, that's very big. I think any online entrepreneur knows that if you don't have control of your sales and marketing portal, it's going to be very hard to get people to where you want them to go.
That's right.
How do you think artificial intelligence is changing the way that you do business, if at all?
It is changing the way that we do business. This is a big one. And I think it's so early in the cycle around what's happening. But I think the conversation is very quickly moved from, at least in my household, my son's doing their homework using AI, to what are some things that are some of the challenges. We are a FINRA member broker-dealer. So anyone who comes in, we're vetting them. If there's some sort of bot or AI or other site that comes up that starts gaining traffic away from that, we need to be concerned about that. I'm seeing a lot of whether it's fraud or other types of things pop up, and you just have to keep track of that. The beauty of making things more efficient is that you can do it much more quickly, right? You can get an investment in a minute. You can get an investment in 2 minutes. As you become more efficient, you become less resilient. So you need to kind of weigh efficiency with resiliency and make sure that you're constantly monitoring for changes in technology and how that is going to impact your business in ways that you may not have even thought of. It's going to be fascinating. And I have 2 teenage boys, and my younger son is really concerned about AI. I got him on ChatGPT, and the first thing he said is, "This connected to the internet? I don't want this connected to the internet." And I said, "It is." He went, "Oh no." I find it fascinating tracking that and seeing how it evolves.
Absolutely. I think it will be as well. I did not ask you, how much money have you raised and how many companies have you helped raise money to date?
So we've raised, in terms of how much money have we raised for companies or ourselves?
I guess both, actually.
We've raised about 40 million for companies. And that's across, I want to say, like 30 some companies. And we've got 17 companies right now out raising roughly, I want to say 300 million. I could be off a little bit by, 10, 20, 50 million, depending on who's launched. That's sort of what we've got in the market right now. We personally have raised about $18 million in capital. So that has been, it sounds like a big number, but it's been over 7 years. It's been a knife fight to get that money in, but it's been critical because we are a regulated entity. It's expensive to kind of set this business up and run it.
Is Rialto earning money? How do you earn money?
We earn money in a couple of different ways. In our primary business, what we do for companies in raising money, we earn a small setup fee. That's just to cover our cost of our people. And then we earn the bulk of it through commissions. We call it success fees, but you could also call it commissions. So all money that's raised, we take a percentage of that. We take anywhere from 2 to 4%, depending what product you're using. And then we have another product where people can white label our entire platform. They can white label our primary issuance and our secondary trading. And that's our enterprise solutions. We make money on that we basically customize the workflows depending on what they want to do with the platform. That's a setup fee that we charge. Then we charge a monthly fee to maintain that technology and operations. And then we charge commissions. And then on the secondary market, we charge commissions. Because we're a broker-dealer, we can charge those success fees, which help align incentives and economics for our clients.
But it's interesting how there are such diversified ways of making money, because the white labeling and having it integrate into someone's portal, that's a recurring revenue for you, essentially.
That's exactly right, which is helpful.
So as we're wrapping up, if you are a woman who is new to investing, but is interested in both the risk and reward of investing in an early stage company, how do you suggest that she starts with a platform such as yours?
Yeah, I think it's important to research the company. We often see people coming in and investing because they love the company. It's a passion project. It's a passion idea. And I think that's critically important. But also really getting comfortable with financials and understanding financial statements and actually reading the language that is put up. There's so much that's provided in terms of disclosures, in terms of the information available. Understanding that, and I don't mean studying it for 2 weeks, but I mean, reading it and really understanding it's going to be challenging your first time, but maybe putting, a minimum investment in and tracking that, and then finding another company and looking at it, and you'll become more comfortable with the language and educating yourself on what's important and what to watch out for. To me, that's what I love about this market is you really can start to educate yourself for very small amounts of money and build that portfolio over time. And that gives you a whole nother skill set.
That is so important and incredible and exciting. Where do you want Rialto to be 5 years from now?
Oh, this is exciting. This is fun. Well, I really think 5 years from now, private markets are going to change in so many ways. I think average investors are going to have access to products they never had access to before. In the traditional, you often hear about the 60-40 portfolio, 60% stocks, 40% bonds. I really think that's going to change. And there's going to be a carve out of, it might be, 50, 30, 20 for these alternative investments. And people are going to become more comfortable with earlier stage companies, becoming involved in the journey of these early stage companies, and also investing in assets that are counter-cyclical to stocks and really help weigh that portfolio and balance that portfolio out. That's what I get excited about, is building that infrastructure for that world in 5 years. Because to me, then the cost of investment is really going to have come down to a low point, and it's going to open up so much access and opportunity for investors and issuers alike.
And that is exciting. And I think if you ask most people, they are very pro small business. And so this is an opportunity to be able to be more involved, which I think is exciting.
We're working with some community banks, if I can just add, we're working with some community banks who we're working with them to help structure. They'll have a debt, sort of a debt offering, but they need to have a certain amount of equity for the company to have to give them the loan. So to be able to combine that and have the community really rally around small businesses and businesses that they care about and they want to see, I really feel like we're at a point in time where like the pendulum's swinging back. Everything got so big, 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 big. Now let's bring it back to the community. Let's bring it local. And to me, that's impactful.
I think women-owned small businesses are one of the fastest growing segments. And so that is also so exciting.
It's so exciting. And being able to help women-owned businesses, because it's challenging.
It is very, very challenging. Where can listeners find out more about Rialto Markets and about you?
You can go to rialtomarkets.com and you can see all of our issuers, all of our products and services there. There's a link under the team to me and to my LinkedIn.
Thank you so much for coming on SheVentures. This has been a really educational conversation.
Thank you so much for having me. I really appreciate it.
You've been listening to SheVentures. Like what you heard? You can find us wherever you get your podcasts. Be sure to subscribe and sign up for our newsletter so you never miss a show.